Hello and welcome to Future Asset 2021. I'm Iona Bain, financial journalist and author of Own It, How Our Generation Can Invest Our Way to a Better Future. And I'm delighted to be supporting this fantastic competition for the third year in a row. I want to give you an overview of what to expect from the competition, how you can maximise your chances of winning, and I'm speaking as a former judge here, so I've got the inside track. And also why investing matters. Why should we care about asset management and possibly even consider it as a career? Well, stay tuned because I'm going to reveal all. Firstly, thanks so much to all of you who have taken the time to enter the competition this year. We've been blown away by the response, with so many more teams entering than we expected, which is just fantastic. So we're thrilled that you've made the decision to get involved, especially when you've got a lot on your plate right now, but I'm sure you won't regret it. Thanks also to all you awesome teachers who are doing so much to support the teams and create a fantastic experience here. And of course, thanks to our investment mentors who will be generously giving up their time and precious expertise to really help make this competition happen. So why am I here talking to you now? Well, as mentioned, I'm a big supporter of Future Asset because I strongly believe that investing is for everyone. Now, investing is a word with various definitions. Here are a few provided by Merriam-Webster. To commit money in order to earn a financial return, the act of putting money or effort into something to make a profit or achieve a result, the act of buying shares, bonds, property, etc. in order to make a profit. So broadly speaking, investing means the commitment of something, often money, in the hope of achieving future returns. And the key word here is commitment. Investing takes time. So how is it different from saving? Well, when you save money, it basically goes in the bank's coffers and is lent out to borrowers, i.e. those buying mortgages, loans and credit cards. You get a very small reward as an incentive, known as an interest rate. But right now, this reward is tiny, and actually there's a risk that money put in the bank ends up losing its value. Well, something called inflation, which is the rate at which the cost of stuff rises. So if you have inflation running at 2% a year, a basket of goods worth £100 would actually cost £102 next year. So if you have savings worth £100, but you don't earn an interest rate of at least 2%, your money is not keeping up with inflation, it's losing value. When you invest, however, you're putting your money into assets that should become more valuable over time. This way, you're not just beating inflation, but you're earning what's called a return, which is basically a profit. And the aim of the game is to earn comfortable returns year on year to hit certain targets, yes, but more importantly, fulfill goals that matter to you. Well, when your money is invested, it's out there in the real economy, doing vital stuff. Investing means putting your cash into companies, governments, industries, anything that might grow your money. It gets invested in businesses that create jobs, fund important public projects and new technologies. And it might even be the key to paying for that all-important transition to a new greener economy. There are two key things to bear in mind about investing. Firstly, risk is a really important concept in investing. Investing is fundamentally more risky than saving because there are no guarantees here. The value of your money can go up and down at any moment due to all kinds of factors, from a tsunami in East Asia to a tweet from the US president. Some assets are also riskier than others. So for instance, there can be a difference between a massive company that's been around for decades and pays reliable dividends, basically little regular rewards paid to investors to keep them sweet. A big difference between that and a tiny startup that's putting forward a new technology that could change the world or totally flop. And also, the longer you're investing for, the more you can minimise your risks. So that's why the common advice is to invest for at least 5 years, so you can ride out the ups and downs of the stock market. The second thing to remember about investing is that it's not random, it's not based on chance, and it's definitely not the same as gambling. So if you go and place a bet on a football team, say, or who will win the next series of Strictly Come Dancing, you're putting yourself in the lap of the gods. Who knows what will happen and whether it'll be your lucky day? It really is down to chance. But with investing, you do your homework. You find out, is this company undervalued? Does this company have more years of growth ahead of it, or are its best days behind it? Is it in the right place at the right time with the right kind of service, product, or technology? Is it well managed? Does it have a plan for how it will adapt in a world of decarbonisation and unsteady geopolitics? This is not about eliminating chance events altogether, but what you are doing is making an informed decision about whether something is a good investment, whether it's a company, a sector, or a whole region. And when you put together a portfolio, you're trying to create a balanced, well-judged range of investments that are well positioned for the future. I think of investing as an act of practical hope. You want to have a better future, and you want the world to have a better future, and investing is a practical way that you can make that happen. So I've explained why investing matters, but why should you care about it? Well, I think a career in investment shouldn't just be for the boys. We all deserve a chance to be able to grow money in the stock market and shape the future of the economy. But traditionally, men have dominated the City of London and other big centres of investment in the UK, where all the decisions are made about where our money goes and how business grows. There are more chief executives in the FTSE 100 called Dave or Steve than there are women. The FTSE 100 is basically the top 100 companies in the UK. So if it's mainly men calling the shots in this arena, what effect does that have on society and the economy as a whole? I can imagine it's a pretty profound one. Indeed, research strongly suggests that if we have any industry dominated by just one gender or type of person, it stifles innovation, creativity, and ultimately progress. It leads to bad decisions and groupthink, which ultimately makes all of us poorer. And in the financial industry, it ends up funding products, services, and technology that just don't reflect the needs and challenges of society as a whole. Plus, there is strong evidence that women can bring something really unique and valuable to the table as investment managers. They may be a little more cautious than men, which is often no bad thing. They may think more about the bigger picture, like whether this investment contributes in a positive way to society. And finally, having more visible women in the investment industry will encourage other women to see investing as for them. Something that can help them achieve their own goals, whether that's financial independence or a happy family life. You can't be what you can't see. But women shouldn't just get into investing because the industry needs them, although it really does. Working in finance can be an incredibly fascinating, rewarding and fulfilling career. The industry has made huge progress, even in the past 10 years, in making itself more female-friendly. It is possible to have that career where you can have a say, you can make an impact, and use the powerful tool of investing to create opportunity and progress in the economy, and to make the world a better place. But you can also have balance. You can have choices. You can do things on your own terms. You can have a family and work the way you need to, because the world is changing and the financial industry is no exception. So, I've hopefully given you a good idea of why investing matters and why you should care about it. But why are we here, running this competition, and what's in it for you? Well, the whole purpose of Future Asset is to give you a chance to try your hand at company research and analysis, a job that's central to investment management. Here's what you're going to get out of Future Asset. You're going to gain real insight, knowledge, and experience when it comes to investing. You'll have a unique chance to work with genuine investment professionals, the real deal. You'll gain experience for job applications and personal statements, always a bonus. You'll develop valuable, transferable skills from analysis and communication to teamwork. And after all that, you may even decide to pop investment management on your list of future careers, and it may take you somewhere amazing that you never expected. Now, when I was at school in Edinburgh, I was a musician, someone who never dreamed in a million years that I would end up writing and speaking about money. But life took an unexpected turn. I kept an open mind, worked hard, and played to my strengths. So I've ended up with a career I never anticipated, but I absolutely love it, and I have no regrets. Now, you may think right now, just like I did, that you're not mathematical enough to do finance. You're too idealistic and creative. This whole area is just too hard. Well, you may be surprised at just how versatile you are. Your skills, your ideas, your personality, they may be exactly what the financial sector is crying out for. You'll never know unless you give it a chance, right? But here's the thing, if you decide after this competition that this is not the career for you, that's okay. We are not here to force anyone into a career they don't want to do. That is not good for anyone. But still, I really hope over the next few weeks that you'll learn a huge amount, gain skills, hopefully enjoy working with your teammates and our lovely investment professionals, and in the process, boost your confidence no end. What's not to like? Also, we are genuinely interested in your thoughts and opinions. We would love to know which companies you think will grow in the future and why. Which companies offer the best products and services? Will we still want those products and services in 5 to 10 years' time? Will the company grow? And if so, by how much? Investment managers, whisper it, they don't have all the answers. We're sure you've got an awful lot that you can teach us too. And my first tip is that the more that you put into this, the more you're going to get out of it. So hopefully you're all fired up by this point and thinking, right, let me at it. How do I win this thing, Iona? What are your tips on how to impress the judges? Well, I'm loving the enthusiasm, but before we get to my tips, let's just quickly run through the competition and how it's going to work. And then I'm going to give you a few little hacks, but don't say they came from me. Shh. Firstly, decide when your team will meet and how you're going to work together. Then, contact your investment mentor, introduce yourselves, find out about them, and decide how you're going to work together and when you're going to meet. The next step is to pick a company from the company's crib sheet. Look through the research report and get a grip on what information we are asking for. Get started and tune into the weekly masterclasses that we're offering to get tips and ideas. Write your report and record your elevator pitch video. Submit those by the 30th of November at the latest. We will announce finalists in the senior and junior competitions in January 2022, and in the final in March 2022, teams will be asked to expand on their investment case and answer questions from the judging panel. We will find out if it's live or online nearer the time, so stay tuned. All right, let's finish up with some hacks on how to do well and impress the judges. Here we go. Number 1, pick your company carefully. You do not want to turn around after a few weeks and decide, actually, this company wasn't really the right one for us. So spend some time really checking them all out and work as a team before making a final decision. Now, there will be some companies that you'll have heard of. Last year, lots of people wanted to do Greggs and Netflix, which is very understandable. But tactically, it might be better to consider companies that aren't as well known, because that way you'll stand out. But at the same time, you do want to find a company that you are genuinely interested in. So it's about striking that balance where you're picking a company that will help you make that compelling, distinctive investment case, and also one that you'll be motivated to learn about. Number 2, think about the bigger picture. Companies do not operate in a vacuum. Their prospects are massively influenced by what's going on in wider society and politics, so it pays to really interrogate how a company is engaging with these future challenges and consider not only if they are well placed to cope with them, but also whether they actually have an ingenious and profitable solution for them. Number 3, get organised. Put all the dates in your diary, including meetings with your mentors, and give yourself and your teammates enough time when you're doing research so you're not rushing it. Pick times when you're not tired and distracted so you can bring your best self to the project. Number 4, be prepared. Once you've put together your investment case and you're ready to make your video, try to memorize your arguments so you're not reading word for word off a sheet of paper. Really get to know your investment case inside out and practice making it in front of the mirror, then rehearse in front of your parents, your mates, your dog, whoever will be a sympathetic audience. Do this until you get really comfortable talking about this stuff. Practice really does make perfect. 5, back yourself. If you've got an opinion you want to voice during research, then speak up. Don't be shy around your mentors. There is no such thing as a stupid question. When you make your elevator pitch video, project and try to talk as clearly as possible. You want to go for calm confidence. And the way you can achieve that, if you've done all the work, is to believe in yourself and your teammates and back yourself to win. And last but not least, try to enjoy yourself. Find the fascination and fun in this project, because if it comes across that way to the judges, they will love you for it. So that's it. All that's left for me to say is that I'm so proud of you all for taking the step and putting yourself forward for this experience. You deserve huge credit. And whatever happens, as cheesy as it sounds, you are all winners for doing something new, brave and exciting. I look forward to seeing the results of your work, and in the meantime, good luck.